All right. Hey there, YouTube. How you doing? This is Sean from Invest to Live, and this is our fifth episode of a sneak peek for the week for investors and traders. And we try to keep things very macro focused. A little bit of commentary on what I think is happening or how to take some of these pieces of news. This was a particularly busy week and busy weekend as far as some breaking news over the weekend or the past couple of days here. So I thought I'd cover some of these things. Also, you might notice get a little sunburn here. So I was out coaching baseball this weekend, which is great to have that season back. Feeling good about getting that and getting out in the field with the kids. So really good stuff there. Let's pop in for a second. I really focus on trying to keep things away from politics as much as possible, and just be a bit more focused on like what the outcomes are, how to take things, how to view things in different ways. A lot of what I talk about is hedging, and a lot of that hedging is how we look at the downside risk and protecting ourselves. But one piece of caution, and I'm throwing this in here only because it's live, and I wasn't really planning to talk about this, but there seems to be an overwhelming, I would say is the right word, amount of interest in really, really speculative altcoins in sort of that crypto marketplace. I'm not saying great things can't happen. I'm not saying that like we haven't seen over the past several years something that was worth nothing now become worth a whole lot. For sure, it can happen. What I'm just saying is simply, if you're looking for areas to speculate, just really, really be aware that to some degree, a lot of this is now really getting to be like gambling. It takes almost nothing for folks to launch these crypto coins at the very bottom of the market, these unknown, unheard of things, where it takes very, very little for someone to pump it up using things like Instagram, Twitter, Facebook, certainly TikTok. So I'm not going to go deep into this point, but just for what it's worth, if you are looking at these cryptos that are worth like, 0.0000, keep going, whatever, one, right? And your whole big plan is I'm going to get 100 million coins and somehow miraculously it's going to go to a penny, and at only a penny, I'll be a millionaire or whatever the case might be. Look, let's be honest here. The market cap for those coins would be in the trillions upon trillions of dollars. So it's not the fact that it's a penny, it's the fact that there's so many of them. So you have to understand, we're not talking about like you can't potentially double your dollar amount through a pop or through a pump. What it really comes down to is like, can it ever achieve that level of growth? And the reality is probably not. There's just not enough capital on planet Earth to get all of these different things all to trillions and trillions of dollars of worth. It doesn't exist. So I'm not saying don't shoot your shot. I'm not saying don't take your chances. I'm just saying make sure you understand that in order for something like that to get to that dollar value, it's essentially going to take practically a miracle. So just be aware of that. But let's jump into the real meat and potatoes of the episode today. Three topics I'm going to be talking about, particularly EU might be or is considering travel to Americans who have been vaccinated. India continues to struggle with the COVID crisis. And the last piece of it I want to spend some time talking about is Biden's new capital gains proposal, what it means, what it looks like, what you should be thinking about. Is this something you should be panicked about? And just a little bit of my commentary on that space. But let's start up top. So in relatively breaking news, the EU has come out and said that they may consider opening up travel for U.S. citizens or tourists who have been fully vaccinated. This is really interesting as an investor or as a trader, because I start thinking to myself right off the bat, okay, well, what does this mean, right? From an investment perspective, this means, we're going to have to get flights. This means airports are going to be busier. This means potentially more rental cars, might mean Uber and Lyft in Europe. This means hotels. This means Airbnb. This means, FSBO. So this is one of those interesting moments where you're kind of getting a little bit of a heads up on what is likely to happen. And I think that, again, the key here is they're just saying that they may allow travel. I personally think that there's speculation that's extremely risky, like that of investing your money into unknown crypto markets where it's, you have to jump through 10 hoops to even get a hold of the tokens you're trying to grab, versus potentially making some plays on good, strong names in the airline space, in the hotel space, in the general travel space. So I think there's something to think about here for sure. If you've been waiting for the right moment or looking for some news that this market might be changing, definitely start keeping an eye on this. Start to understand what those restrictions look like, when the news is changing on it. Is the EU really going to open up? And with that being said, the EU is not all of Europe, right? So who else is going to be open, is going to be able to cross between borders easily? What should you expect when you're there? These are the kind of things that I use as my baseline for thinking about where to deploy capital. I know I talk about this all the time, but really understand like, hey, if it opens for fully vaccinated folks, we know that that could be tens of millions of people potentially. How many people normally travel to the EU region? Of those people, how many stay, where, and how, and get those statistics and work through those numbers and understand what the kind of an upside you might have. And again, I think it's really just simple math. Figure out, what it looks like in a normal year. Think about what the potential could be based on who's vaccinated and also who's willing to travel. And you should be able to get some sort of an idea as far as, what kind of an upside could we see. And this is a great example as well, that if you're thinking about making an investment in an airline, a hotel company, Uber, Lyft, whatever it might be, because you're excited about the EU possibly opening up, great. That's a great underlying macroeconomic reason to make an investment like that or a trade like that. But it's also the perfect time to think about the fact that this is why we hedge. What if they open up and then suddenly shut down and we see some drop in those prices? That's okay, because you'll be prepared. You have those stop losses in place. Perhaps you're playing with puts. But either way, you should have something there. Make sure you're protecting yourself. Now, on the same piece of this COVID pandemic, and speaking of the EU opening up, what we're continuing to see, and it's just a really, really unfortunate situation, is for our friends over in India, we're continuing to see COVID cases rising. They're having a lot of struggles and issues around getting people vaccinated. And much of the world has stepped up and said they're going to find ways to help, whether this is sending vaccines, sending over materials to help get them up and running, helping support the tracking of this. So although right now, I think a lot of thoughts and prayers are going out to India in general. A very big population. Want to make sure these people are staying safe and really making sure we're giving them the opportunity to be safe. From an investment perspective, I think there's two considerations to take here as far as India is concerned in that population. Number one, we know that they are huge users of oil and also producers, and lots of agreements in place around this. So we need to start to think through, what does this look like for commodities? How could this COVID crisis happening in India right now affect commodity pricing? How could it affect general markets there? What does this look like for its neighbors? And then also from a global perspective, if they're not able to control this and it continues to spread, does that start to push out of the borders? Does that start to create sort of a new wave or a new issue going on? So these are the way I say this a lot on these, and I'm going to say it again, is you really have to get as macro as possible, as high level as possible, right? What if India continues to struggle with getting COVID vaccines? And what if they don't? What if they solve for it right away and they get the help they need and things are rolling? What does that look like from an investment perspective? On the downside, who's most at risk? On the upside, who has the most to gain? Start to spell that out and build your ideas around that. And then again, it's really simple. If you think you have a great idea, you have a high conviction belief in that, back it up with a stop loss so you don't lose money on it, or give yourself a trailing stop so there's some ability to fluctuate as you go, but lock in gains. Speaking of gains, this is going to be my final point tonight, and it's probably a really good pickup and a way to end this, is we saw quite a bit of capitulation in the market last week. Thanks, man. Income stock investing, a good friend on YouTube here, commenting on one of my last videos that got a bunch of views, and really appreciate that, and always appreciate the comments. Just about to jump into capital gains, speaking of which really is a big piece of this here. We saw the markets go wild last week. And part of this was, as we were told from general financial media, that Biden's tax plans for capital gains could rise as much as 43.4%. This is really like a baseline, somewhere around 39 to 40%, but there's also a surcharge for Medicare built into that. So we'll just call it 43.4% total on all capital gains, not just short-term, but we're talking long-term capital gains here. So it's important to note that, number one, currently it's sitting at, give or take, about 23.8% tax rate for the highest taxpayers in that market. And that is specifically speaking to capital gains held for over a year within investment accounts, et cetera, right? Always speak to a professional and all that stuff there. But the reason this is particularly important is there is this sort of assumption, and this is, again, going to this idea of macro investing, understanding what macro means and how you trade and invest around that. I think the initial fear when this broke was, whoa, like I don't want to pay 43% every time I make money. It's like, let's pump the brakes a little bit. And we're not talking any politics here, where you believe, what you don't believe, who you back, who you don't. Let's look at just numbers for a second. Right now, today, currently, before anything is done, if you take gains short-term, less than a year, you are paying ordinary taxes on that, like income, like a regular income or wage tax. Okay. So based on how much you make, that's going to be how much you ultimately pay on those gains today. What this new rule is proposing is for high income earners, they're saying $1 million plus in yearly wages will no longer get that break on capital gains that are held long term. So the first thing I want to say is, please do not panic. This is not a moment where you have to go into the markets and start selling like crazy, because the reality is a lot of people keep their investments in tax deferred or tax sheltered types of places anyways. So right off the bat, this doesn't necessarily affect all that many people in all that many ways. A lot of folks, wealthy or not, are not necessarily making all their money through capital gains in the first place. I think that these are the kinds of knee-jerk reactions we've been seeing in the markets lately, where every time a news line comes across, it's seen as extremely negative right away, and I have to do something today or I'm going to lose all of my money. That is the wrong way to invest your money. Investing is a long-term game. You keep it, you grow it, you do your best with it, right? Even if you're a trader, trading is also about looking at the big picture, looking at the macros and bringing it down to the micros to understand where opportunity lies and how to get that. If you're a short-term trader, this is meaningless to you anyways, because you're holding your gains for hours or days or even months perhaps, but typically not for those long-term periods where you'd already be paying these higher rates as it is. The other piece of it too, for what it's worth, is I often like to think about, where is this panic even coming from in regards to these capital gains rates, these taxes. I think that this is yet another point of interest where, so what? So they start to tax this piece. Now, I'm not talking about from an economic perspective. I have opinions on that, and I'll share a little bit of it too. But as far as like a normal, regular investor who's trying to learn, trying to grow their portfolio, maybe gets in and out of some positions from time to time, these aren't major market movers, frankly, right? These are movers from getting people to watch the news, but not within the markets. That's why you often see these dips and then stabilization comes in. One thing I like to think about myself, and where I've seen a lot of great gains over the years and how I've built a really strong portfolio, is every time a story comes out and breaks around this idea of huge tax increase for capital gains and everyone goes crazy and the market crashes, that's when folks like myself and people I work with and deal with all the time, that's when we go in and we buy stuff when it's cheap or at a discount. And we know once the news changes and the whole story comes out, it's going to start to go back up again. Like when I saw my very first headline on this tax plan for capital gains, all it said was Biden taxes 43 point whatever percent, right? And people are like, oh my God, I'm losing 50% of my money. No, it's only for top earners in the absolute top tax bracket in taxable accounts with a certain period of time associated with it. By the time you start to drill through that and drill down who's actually affected, how many of those people are actually taking huge capital gains on a constant and regular basis, where this is even going to be something that's a huge problem for them? And can we just be really honest here as well? Folks who are sitting in that tax bracket oftentimes have the help of CPAs and other financial advisors to make sure they're making the right decisions. They understand how to make sure they're rolling those into other like-kind exchanges. They're not paying those high tax rates. So don't let news like that affect the way that you invest or the way you go to market, because frankly, it's not something you need to worry about. It does mean don't be aware of it. But again, this goes to my whole thing I say all the time of continue hedging, continue planning, stay ahead of the game. I'm going to wrap there, but what I just said a minute ago is I'm going to kind of share my thoughts on this as well. I as a long-term investor and also a time-to-time trader who's very diversified across a number of markets, a number of holdings, many asset classes. I hold a certification in alternative assets. So one thing I just can really say from a long time of being in the space, been investing since, the very late 90s, seen a lot of different markets. And one of the reasons I'm doing this on YouTube is I just think there's a lot of folks who are spitting the same stuff all the time, regurgitating the same stuff. I'm just trying to give you some different perspective. You have to take a step back and understand things in the biggest possible way. Who can gain the most? Who can lose the most? How do you protect yourself on one end and make sure you can grab the gains on the other side? And I think that the more you get your arms around investing is just one part of a total financial plan for yourself and building your wealth, I think the better off you're going to be. So just keep focusing on the full spectrum, right? How you invest your money, how that works, what asset classes you're in and how they affect each other. Look at the macros, look at the risk. Understand how taxes play a role in this. Are you just in stocks, or are you also in real estate? Are you looking at things like options? Or are you understanding futures? Are you in the crypto space? Do you hold artwork? I don't care, right? Whatever it is, just be aware of what that risk is on your overall portfolio and make sure you are in a place to be able to take advantages of the good things and avoid the bad things. But just some like real kind of commentary here on all the stuff around taxes and the constant talk around more taxes, these taxes, those taxes. What I find, having some gray hair on the head and in the beard here, is it's never that big of a deal at the end of the day. We scream about it on the news. We scream at each other about it. Everyone gets really angry. And then the market just goes up again, right? And I'm not saying that, things that have happened in the past will always happen in the future. We know that's not the case. But I think it pays to be very cognizant of the fact that we can look at historical charts across many asset classes during different tax rates in the country, different types of politics, different political leaders. We can see the companies that are coming and going in the Fortune 500 over time. We can look at who's grown, who's shrunk, who's disappeared, look at the wealth of different countries around the planet. And I think the one thing we just have to always realize is there are reasons at play oftentimes that aren't obvious, or we don't always know, or seem obvious or misunderstood to why these things are happening. But I think there's a lot of value, frankly, in just like looking at the markets as a whole and saying, is raising capital gains tax on a certain group of people on very specific terms at a certain percentage really like earth-shattering to your portfolio? I think for sure that overtaxing can probably cause problems with the economy. I think that oftentimes the real issue is we don't know where the money goes and yada, yada, yada. That's a whole nother conversation to have. But what I would just say is there is this feeling of like everything that I read on the news or everything I see on TV is going to affect my portfolio. It's probably not the case. Unless you have an absolutely monster portfolio. If that's the case, I want to talk to you anyways. You tell me how you got there. So I just want to thank you guys again for watching. This was a pretty long one today. I just got back from vacation, got a little suntan on the face here. Well, really just a red burn, as you can see. But I'll just say this, right? The reason I'm doing this is just to encourage a little bit different way of thinking about how things interact with each other, right? If the EU opens, what's the macro? What does that change? Who's going to travel there? Is it going to be different than previous years, and how to take advantage of it? We feel terrible for our friends in India. Are they going to be able to get what they need to make sure that they're safe and feeling safe and the economy gets back on track and they're doing well over there as well? And then, just looking at taxes in a way that's not just a headline basis, right? Like if all we ever read are headlines, I would swear when I open the door in the morning tomorrow, the planet's going to be gone because of how bad things are every single place we look today. So look, let's keep it about investing. Let's focus on our own portfolios, where we have opportunities and risks within it, and how we can keep striving forward and doing great. And with that, again, if you watch till the end, thanks so much. If you're not subscribed, I'd really appreciate it if you do. And please hit that like button. We really, really do appreciate it. And by the way, if you are still listening today, we broke 400 subs this weekend, which is absolutely unbelievable. I can't believe I'm saying that because, frankly, I never really got to doing this with any thoughts that anyone would watch it or pay attention or sub or anything. It was just really more desire to share some knowledge, the things I pay attention to, the way I see the markets are a little bit different than some other folks, and just provide sort of like an additional stream of consciousness in the way that you look at your own portfolio. So with that, thank you very much. Appreciate the growth and the watching and great comments as always. And hey, have a good week and good luck investing this week. Take it easy.